Good morning, traders. It's 8:03 a.m. Chicago time on Wednesday, um, the last day of trading here in May, the last day of May. Shoot, I messed up this poll. Let me redo this poll here. 1 second. I meant to say replay. 1 second. Sorry about that, folks. In the live chat, you will see a poll, and it's supposed to ask, how often do you replay? So I'm going to take that one off and redo it. Apologize for this. Tried to do it last minute, and that didn't work. Lack of preparedness. Ooh, trying to do too much. So here it is. Please vote again. We have daily, we have never, we have after a break, and we have, well, after a break and never. How often do you replay the chart of the day? Boom. All right. Please go answer that. It's been launched. You should be able to see it. Sorry about that. Yeah, that took about a minute and a half. Apologies for that. Please do participate in that question there. I basically want to know how often you go back and replay charts. This is really important. This is really important practice if you do it, but I want to know honestly how often you do it, how much attention it gets. Again, it is May 31st, 2023. It's now 8:05 a.m. This is episode number 2473. We're just 27 episodes from 2,500 episodes. We're getting there. Maybe that'll be the finale. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Mild risk off sentiment today. We're kind of scraping the bottom across the board on the indices. Crude taking a pretty big tumble. Down as the market continues to price in what we're seeing across the board. One of the things I wanted to cover with you today, I'll do it now just to get it out of the way, is the action in ags. Commodities across the board have been getting kind of hit, and if you look at various commodities, you'll find that it's a lot of products are coming off. You could see the commodity sector was hot last year, and it's just tumbled, and it's continuing to tumble, taking out its lows. Nice little impulse, very rough consolidation here on this ag index. And now it's taken out the impulse low. So we're kind of seeing across the board, across the commodity complex, we're seeing this kind of action where prices are coming off. And China didn't perform as expected. It's open, yet it didn't perform as expected. Crude just taking an absolute beating this morning. Crude, we've seen bigger down days in crude, but overall, it's kind of interesting because a lot of market segments, including treasuries, are pricing in some sort of slowdown, recession type of disinflation type of environment. So, debt ceiling deal clears House Rules Committee. House vote expected this evening. Some Republicans are against this. Some Democrats are against this. Democrats don't like that it's slashing help for people. Republicans don't think it's gone far enough to slashing federal spending. And so they may slow it down, but it's very likely to pass because they've run out of time. And I don't think this Congress wants to be the first to cause a default. There's just a ton of Fed speakers today. I'm not going to go through the calendar. The most important piece of the calendar is the JOLTS job openings. It's been cooling off, which is what the Fed would want, and it's likely to continue in that trend. China's MBS manufacturing PMI lower than expected. The concerns growing in China's economy. China is going to have to start stimulating one way or another. German and French inflation lower than expected. Italian higher. Fed's master sees no compelling reason to wait for a fresh rate increase, and the debt ceiling deal removes a big piece of uncertainty over U.S. economy. Goldman Sachs prepares another round of job cuts amid deal making. So this is the overall pictures. This is the overall picture. We didn't have anything major before the open in terms of earnings. We do have Salesforce after the close. And for some of you who are catalog fans, Victoria's Secret. But again, the market is mild risk off. We had an impulse off the open on the indices, and we're just now taking out those lows. The S&P is in a multi-distribution profile. The S&P is kind of starting to build a balanced profile with the overnight point of control, VWAP, and mid on top of each other. We'll go over that in a minute. Volume's pretty healthy, and the range is okay. The inventory is 90% short, 90% of the overnight volume occurred below yesterday's close, and the point of control is at 42.05. If you recall, 42.04 was a key area from the past with the century figure of 4,200. We went to 41.92 in the overnight session, and that's what's going on. The NASDAQ still holding on to its gains. Here's what the picture looks like in terms of the action. Again, this is a 4-tick Renko chart currently. 4-tick Renko chart. It's more noisy than a point and figure chart, but you can see that we had an impulse early on. We pulled back pretty deep, right? We pulled back all the way to the swing close here. From yesterday, we pulled back pretty deep, and now we've got the continuation. So this is the impulse, pullback, or consolidation, compression, and then continuation leg. Pretty standard stuff. Here. So this is where we are looking at the NASDAQ. Very similar action. Impulse early. It got tangled in the mid and VWAP. The NASDAQ clearly no consensus on price at all. No consensus on price at all. And we have a continuation down now in the NASDAQ. In the Russell, same thing, except, interestingly, a higher low, but the Russell's already weak. The Russell is nowhere near what the other indices are doing. And I know I don't cover the Dow, but probably should throw that in here. Here's what crude looks like. Man, just a nosedive in crude here. Nice retest of yesterday's RTH. On the reopen, pulls right back, and then explodes to the downside. Crude moving value to the lower end of the range, taking out. It took out the 70 yesterday already, taking out the 68. I talked about the 68 is very likely to be tested. You can see a collision there. 68 has a lot going on for it, and 68 is now being tested from below. So if we zoom in here, I'm expecting sellers to get exhausted around this area. Crude has opened, tested down, has tested down, and is driving higher. It's got an OTD drive up. Tough fade under that environment. You'd rather see You'd rather see an open auction on a pullback on the open to short an open test drive, opening, testing down, driving up. You can see the drive in this bar right here makes it more precarious to take that short. You might want to wait on that and wait for failure, unfortunately, and take a worse price. Again, there's a poll going on in the live chat. I'd love for you to participate in that poll. I'd like to get as many votes as possible. We're up to 172 votes. Thank you. That's great. It's good, perfect sample size. What else is there? Looking at the TPO chart, the big picture. Yesterday, really, all it accomplished yesterday is what we expected from the trader bite. Here's the trader bite from the day before. Let me remove myself. Yeah, here's the trader bite from the day before, and you can see that the primary expectation is a gap to settle trade with a test of 4,200, and it just, nothing genius here or anything. I'm not going to take credit for this, but the fact is, it stopped at 4,200 even yesterday. It went to 4,200 on the dot. So this was absolutely and completely perfectly executed. But guess what? Just like we talked about the convergent trading trade talk yesterday with the discussion with the mavens in there, it wasn't an easy short. Let's look at that for a second while we're at it. Early indication on the short. Early indication on the short right here. So we pull back to full session mid. We have a line in the sand here temporarily. Pulls back from below. So we put in these lows, break through. Nice little retest, completely missed. Continues, pulls back into the developing, the market generated data right there. The developing full session VWAP mid, RTH VWAP mid, all together. And then as soon as it falls back into the fray here, you have a short, I believe it was a 31.5 short. And the 31.5 short is looking for the settlement price from that session, the prior settle, which was, I don't remember what it was, 42.12 or something like that. I don't remember. Let me see what it was. 42.13 and a quarter. So we're looking for the prior settle down here, and it couldn't do it. Went all the way back to VWAP, tough hold, didn't work. And then later on, it ended up with a secondary impulse. Didn't see or wasn't actually present for this to catch the short down into the settlement price, and then later on to the 4,200 right down here into the century figure for the big bounce. Bounce back to VWAP. So yesterday, VWAP, full session VWAP was the gatekeeper. Easy to see in hindsight, but it has been, the VWAP has been either RTH, I plot both RTH or full session. They've been they've been in play for quite some time. This is something I plot on pretty much every chart. So that's where we are. So looking at the big picture, what did we accomplish? We opened way up here, tested up, and then dropped off just as expected. This is normal auction activity that's expected. We expected it to test the full extent of the range, which was, we're really looking for it to get down to 41.95 yesterday. We talked about just doing the whole value range from Friday, and it ended up doing that, but it kind of stopped at 4,200 and bounced and finished right up against the prior day's settlement price, the Friday settlement price, and the point of control of the session. So really what the indication was from yesterday is, look, it was too high for conditions to push higher, following the gap, following the news, the debt ceiling news. It's too high for that. We're going to go back and recheck and come into balance with Friday. And by the way, we don't have anything new to price in, so we're just going to have balance on a balanced profile with a balanced close. So what's the expectation into the overnight session? If I was swing trading overnight, the expectation in the overnight session is for it to chop around, potentially get down into 41.95, and then bounce back up. And what it actually did was not that, as I showed you earlier, it actually tried to push higher and it exploded to the downside on the Asian session. The Asian markets all ended red. It was pretty bearish overnight in Asia, semi-bearish overnight in Europe. Europe's still open. And so what we've done is we've built a nice balance here yesterday, but we were shifting the trade downwards. So this is where we are today. So the first line in the sand, key test this morning, 4,200 century figure right there. Wow, look at that beautiful line. 4,200 century figure, key line in the sand this morning. We want to see what happens when settlement's right up here, buddy. Settlement's always on the chart. Always on the chart. And settlement's only for the prior session. We don't keep settlement for the sessions older than that. So this morning we want to see the quality of the bounce to the 4,200. We want to see the reaction at the 4,200. We want to see buyers lifting blue dots, pushing 4,200 and failing to win. Okay? That will give us exhaustion. That'll give us trapped longs for the short back down to 41.95. And that brings us to our next critical test, market profile wise, which is the repair of this structure here. So you have 41.95 all the way down to 41.87 or so. Pretty clearly a weak area. That would bring us back into the 41.90-ish, which is a double bottom from way back here. Back here, right? So might watch out for that. If we breach, we stopped just a couple ticks ahead of that double bottom this morning. But if we push through to the other side, then this could very quickly drop back into the 41.50 area. So we will have moved from 42.40 to 41.50, and that's very plausible for today. So because we're opening below yesterday's profile, we have a gap situation. When we're comparing a gap, we're comparing it to the most recent auction, but we're gapping into more of a balanced area. So the question always becomes, do we get responsive buyers? In this case, it's buyers because they're responding back into the auction. And if they do, how do they treat 4,200? How do they treat yesterday's value low? And if they fail at 4,200 or at the value low, then you're looking for 41.87 from about 42.04, 42.05. That'll be the key trade. If they come back into the range, retest yesterday's range and hold the 4,200 and take out the morning high, then it's a G2S setup, and a retest of the point of control, or basically a retest of the 42.15 area. That's what we'd be looking for in that situation. So those are the two key scenarios that we're going to discuss, that we've discussed so far, and that's what we're going to look for today. Do you have questions? Plop them into the live chat. But those are the two main scenarios. When we're opening in a gap, very important to remember, this is a dislocation. This is a dislocation of price. The gap happens overnight, of course, but the 500 stocks, 502 stocks currently, are not trading. And so the question is, do the participants in the day, do the underlying equities come in and bring us back into yesterday's bounce, which pushes us back into the range? Because yesterday was a balanced profile, the value area is important, so we're looking for a retest of the value area, 4205, that area, 4200 being the first line in the sand. So if they take 4200, buyers will still have a second hurdle to overcome, 4205. If they go to 4205, hold it, pull back, and hold a higher low, then we're looking for a long in the 4200, 4205 range to 4215. If buyers are really struggling and it's like just like a Super Bowl kind of fighting for every inch, clawing for every inch type of environment, then we're looking for the short side. We're looking for failure at either 4200, 4205, or somewhere around there, looking for it to fail, looking for an acceleration downwards, and then trading the pullback down to the other side of these single prints. And remember, at the end of the day, literally at the end of the day, we expect a certain amount of daily range to be covered, and the overnight range is 25, 26 points. We expect that during the day at a minimum. Generally, we're looking for about 40 in this current environment. But with that being said, 4205, call it 4206, 4205, drop 40 brings us all the way through this entire excess low from last Friday, right? And that's the bigger trade. But let's be modest and talk about 4185 for now. So that's what we're looking at for the S&P. How does it look in the NASDAQ? Same story, folks. Same story. The NASDAQ has the same shape, has done the same thing. We have a completely balanced profile. The NASDAQ is relatively a lot stronger. The S&P is trading, we're talking about 4192 being the overnight low. The equivalent NASDAQ price is way down here. So you can see that they're very much dislocated. There's a lot of room for the NASDAQ to fall. But it's the same setup. Looking at the Russell is trading in range, almost in value. There's not much balance in the Russell. The Russell had a long liquidation profile, so it's very likely to come back up into the value area settlement and just sit there. That's what the Russell is likely to do, but this is kind of what the setup is. I'll leave you with that. It's 8:26. I want to make sure you know that today at 11 o'clock Eastern U.S. time, the giveaway closes, which is about $500, I think, of real-time data from CME, 12 months of real-time data for all 4 exchanges at the CME. And then at 12 o'clock, I'll be on with Jared Tendler and Anthony Crudelli to talk about becoming an expert. So we'll discuss what it takes to become an expert at something and why becoming an expert at trading is pretty tough, so that you can manage expectations and take the steps needed to get as close as possible. Okay? We'll discuss that today at 12. Go to edgeclear.com/deli. edgeclear.com/deli. I'll catch you there.